Hey traders, it's Jay. It's April 12th around 10:30 p.m. New York time, Eastern Standard Time. Just coming up on 10:30 a.m. here in Hong Kong on April 13th, the next day already. And I just wanted to go over how our levels performed during the Tuesday regular session. And well, let's take a listen to what I was expecting yesterday and pay attention to the zones that had been drawn and the levels that had been on the chart. So let's listen into what I said we expected to happen during the Tuesday session of 35.50. Later on, we talked about Simon had actually pointed out that 30 might be a significant level yesterday, and it was. And so this is coming into the Asian session, after the market's over. Exactly, look at that, 30 back up, okay? And where's the first place the market has a problem? 35.50. Now we're playing around in there. It looks like the market wants to try to make another stab back up, maybe to 42.75. So I was expecting the market to try and make a stab back up to 42.75. So going forward, going into Tuesday's session, what do I see? Well, this is back to the daily chart, okay? And on the daily chart here, obviously because of its significance and what we've seen, 35.50 still a major area, as well as 30, since that ended up so far has been low. Below 30, the 30 level, if we were to come back down below 35.50 and below 30, if we kept going, my predictions from or projections, pardon me, from Sunday night still stand that your major hiccup is going to be the black line there at 24, possibly this entire zone from 26 to 24, because we have a couple levels in there. If we break that, then you should see the market heading down to 2010. To the upside, if we stay above 35, well, we end up in the same scenario. 42.75 again will be the significant level for the launch point. If we are going to go higher, if we get above 42.75, then you can see the high yesterday was around 56. So I would be looking for 57.50 to be the next major level. Okay, so 42.75 was a significant level that we were expecting, and then also you can see 35.50 we had in black. 42.75 I didn't change it to black, but you can see I mentioned it multiple times. And 57.50, that was going to be our expected significant level, possible high for the day. So essentially the projections still remain the same. As always, these levels, usually we're projecting out levels on the longer term charts, so it depends on the market's volatility when we actually get there. So we do our best to project where we'll go over the next 24 or 48 hours. But as you saw, it's not an exact science, but man, just having those levels there was plenty of opportunity yesterday. And as I talked about earlier, many of the members were able to take advantage of that. Now, okay, so let's see what actually transpired the next. So here we are on the 5-minute chart of the ES, okay? And you can see exactly what happened. Things went pretty much according to our plan, and let's highlight exactly what we're talking about here. All right, so basically that recap video was ended, approximately where that red arrow is pointing to right now. At 35.50, we came in again to 35.50, bounced, significant bounce off there, probably almost 5 points on that, and we came back into it, bounced again, and we pushed through coming into the London Open, but we could not get back down to the level we had discussed of 2030, which Simon had called out, which He expected that to be a major level for the week in his Sunday newsletter, and so far that has held, and so we were not able to get down to that level. Now I was expecting 42.75 to get hit. So what exactly happened? You can see here, one moment. You can see here we came up during the London session. 42.75 was hit. So let me put the time in there. And came up a second time, couldn't get above the 42.75 level, and made its way down until the US Open. Now at the US Open, just after the US Open, I was telling everyone, well actually even before that, because we opened the room at 8 o'clock Eastern, I was telling everyone, you know, watch out, here we come, 35.50 again. We came to 36 right here, 2036, so within a couple ticks of the 35.50 level, and guess what, where did we go? We went up to 42.75. Okay, I posted some of the trades that I took. I actually took a trade down in that area. I can bring the screenshot in later. And also I caught some of the downside action. Again, taking profits around the 35 level. So here's the two screenshots that I was just referring to in the video. I've cut this into the video so you can see. So you can see right after the open, got my entry here, 36.75. Got my first contracts off right. I took this screenshot almost immediately after I took off my first contract, and then already trailed the runner past break even. So that was the long trade. When we came in 35.50, we didn't quite there. We got to 36, and so I hit the trigger and went in there. And here it is on the downside again as well. Once we came out to 42.50 or 42.75, sorry, and rejected. I waited to confirm that we had rejected. Got in on a nice pullback, 41.25, almost no drawdown on the trade, was one or two ticks, and straight down. Right where you see the stop loss trailed, 35.50. That's where I exited on the last contract. So I caught it both ways, and that was, we came in to test the London lows, and that was just, I managed to exit the position just as I had trailed my stop, and I got taken out when the announcement had been made that that Russia and Saudi Arabia had potentially agreed on a production freeze. Now look, the market spiked up immediately after that, but where did it spike to? Within one or two ticks of our 42.75 level, and where did it come back down to? 35.50. From 35.50, I didn't catch this, but some of the members did. I know Vipul and a few other people caught some of the upside action. I mean, I was pretty much done. I mean, I already, you know, just on two contracts, I was already up $730 or $750. So you know, it was no sweat off my back that I missed the upside. But the great thing was is that some of our members got it. But again, 35.50 came into play for that launch to the upside, and so we launched to the upside. You can see the first level that we had a stumbling block was 44.50, which was also one of our levels, and then it came up and went through our levels at 48.5 and 49.5, all the way up to 52. We did have a level at 52.25, as you can see up there, and you know, we came back down in right there, back into 48.5, and the 40 tagged the 49.5 as well, again on the way up. You know, 52 gave the market challenges here, and here, and 52.25 also acted as support there later. We came up to 54.75, again market reacts, and ultimately we had, as you saw in the prediction video, projected high of 57.50. We went only, I think, 3 or 5 ticks through that level, and we can even measure it. Well, I'm not going to bother because it's so minuscule. Went through that. Let's call it a point. It went through maybe 4 ticks, right? And then that was the high. So the levels were really spot on, and it came right back down to 54.75, bounced back up exactly to the tick, 20.57.50, and then back down to 52 quarter. So, and then we just finally broke above the 57.50. As I said, it's after 10:30 p.m. So we've already ended our Asian session already, and so post that session we finally broke above this level. And look at where the market is reacting right now. Look at where we're getting a pullback right now at 61, which we had on the chart yesterday as well. So a great day for our levels, a great day of trading for myself and many of the members. And so what do we see going forward? Coming into the next session, I would see, since we've already hit 61, the next major hiccup is going to be at 66 quarter, which you can see up at the top of the screen there. And so let me bring that down. 66 quarter, that could be a hiccup. But then above that, I've got 72 half as a black line. That might be a major turning point. Okay, if for some reason we got through 72 quarter, then we're probably looking at 80, the 80-82 area. Okay, so I've got pardon me, let me just double check that. Yeah, that's I believe that's 80 quarter. Let's just grab the, yeah, it's 80 half. Okay, so that's 80 half. All right, not 82 half, it's 80 half. Correction on that. Okay, and a couple levels below that at 77 half and 79. So ultimately the major levels above us right now, 72 half and 80 half. All right, on the ES. To the downside, obviously, you can see on the chart that I've adjusted. Let me take the crosshairs off here. On the chart here to the downside, okay, so obviously we've got 61 to deal with now. That's regular session highs, so we'll see what happens with that. If we were to come back in, the areas that I would be concerned about essentially is going to be 42.75 and possibly the 48.49 level. Okay, those are the areas that I see. I wouldn't really expect us to go all the way back down to 35.50, but you never know. But I'm going to take that off as a significant line. I'm still going to leave it on, but in terms of the action that one would potentially expect over the next 24 to 48 hours, it's probably more likely to be in that 42.75 or in that zone up there, 48 half to 49 half. Okay, just to cover another market quickly in this video before we wrap up. This is a crude oil, the May contract. All right, similar situation on crude oil yesterday. You can see we had some black lines. We actually had a couple black lines, one at 40.07. Okay, so let me point an arrow to there. This is the daily chart. Okay, so I just put a red arrow on the far right there down to the level that I'm talking about. Okay, essentially with that, you know, we picked the low on crude within, you know, 1 or 2 ticks. It was a black line, so obviously we held that more significant. And during the Asian session, we talked about, although it wasn't in the recap video, you can see we had a black line on the chart. So again, that was a significant level. So we broke that. The expectation was that level at 40.78. If we broke that, we would probably head higher, at least to the 41.71 area, which is exactly what we did. You can see those 2 black lines there, and we poked into our next line, which was at 42.13. That went through at about, you know, maybe 10 ticks. So again, it's not an exact science. A lot of times you're going to get the reaction, you know, to the tick. Other times it's usually going to push through, you know, 1, 2, 3, 4, 5 ticks on most markets. Crude oil, you know, sometimes crude oil is a lot more volatile. Sometimes it'll push through a little bit more, which you can see it did on the top side on that 42.13 level, but on the downside it was, you know, nearly to the tick for us calling the low of the day within a tick or 2. So again, this methodology works on all markets, you know, all time frames, whether you like to scalp, day trade, or swing trade. Whatever market you're looking at, this methodology can work, even Forex. And going forward, we're going to have Alex and Eugene doing some of their recaps as well on the Forex markets. So going into the next day on crude oil, what do I expect? Well, that 40.78 level, that's still going to be very significant. I would definitely hold on to that level. I might remove 40.89 or 90 there. Probably don't need that. 40.18. Yeah, I would keep that, or I would keep that one. These levels here, obviously the black ones were up there now, so I would probably change those. You know, those are just going to be our just regular levels, and so we need to pick some top side action here. So ultimately, you know, we've pushed up through that 78. So 78, I think, is still, I'm going to leave that as black, as still significant. Okay. The next levels up that I could see that would be quite significant for us would probably be 42.61. Just one moment, let me. Yeah, 42.66 actually. So we've got that mark. We're gonna mark that off here. Okay, good. So I've changed the color at the 42.66 level. I've changed that to black because that could be a major level, as well as 43.38 to the top side. So to the downside, you know, I mean, it's kind of where we are right now. We're at 41.85. You know, the level is 41.78. If we can stay above that, I would expect 42.66, possibly 43.38. To the downside, again, you know, once we got above 40.78, we were off to the races. So that's, I think, a still significant level. And the two other ones below that we had at 39.80 and 40.07, I'm just going to leave them the way they are. So we've got some levels in between the black ones, but the black ones are the major ones. The other ones, you know, you still need to pay attention to them, because as you've seen on the other instruments and other videos, how well they work. So, you know, and everything in between we can just ignore. So it makes trading very relaxing. So I hope you enjoyed this review. Please comment and like, and come join us. For the Asian sessions, we're going to be having trials every Thursday evening starting at 7:30 p.m. Eastern. And we also have the Tuesday trials that are still ongoing for the regular session every Tuesday at 8 a.m. So go to the website and sign up for that, globaltraderoom.com, and we'll be launching the Trader Institute website very soon, specifically for the Asian session. Take care, everyone, and good trading. Please remember, futures, forex, and options trading is risky. You can lose money, therefore you should only trade with risk capital. Always consult your financial professional before investing, and most of all, don't trade money that you cannot afford to lose. Bye, everyone. See you in the next recap. Good trading.